Recording in progress.
Alright, okay, good evening. We'll get started for today's session. Okay, so as usual, what we're gonna do over here is to quickly look at what has happened in the past week. What are some of the events to take note for this week, and from there we'll take a look into the charts for some of the opportunities within the week itself, and we'll open up for Q&A. So if you have any questions, feel free to just post it in. Okay, and after that, we'll just do a quick closing to update you on some of the upcoming events that we have in August, right? So this is the last day of July. We're going to go into August. We'll update you some events that's upcoming as well. Okay, so with that said, let's take a look at what we have last week for a very quick recap, right? So last week over here, the main focus is of course the FOMC federal funds rate. We did see the Fed hike rates to 5.5. Okay, and of course, there's kind of like a conversation about 5.5 is likely going to be the end of it. Okay, and we're probably not gonna see another hike. Okay, and maybe moving forward, going into like early next year, we may start to discuss about cutting rates. Okay, so fundamentally, at least in the long run, there's a good chance that we're still likely gonna maintain a bearish bias from a fundamental perspective on the dollar itself. Okay. ECB over here, we did see ECB actually hike rate last week. Not much of a surprise. Okay, kind of anticipated that. Didn't have much of a move in terms of volatility as well. So that's about it. And then I think the one that is kind of catching most attention for last week is naturally the Bank of Japan. So Bank of Japan here maintained its policy, okay, but of course the discussion among that is they're likely gonna soon, right, shift from an easing policy into a tightening policy, right? But there are generally two camps of thought, right? One is that we're likely gonna see the yen strengthen because of that shift. The other camp of thought is basically it's not likely going to happen so soon, and therefore in the near term, the yen would likely continue to weaken with its easing policy at this moment. Right now, it's not so straightforward when it comes to the yen because in kind of like if you take a look at some of the major currencies over here, yen is one of the ones that is basically remaining at a very very low interest rate environment, right? And that's where we have this term called the carry trade, right? Carry trade, the idea is you kind of borrow money from a low interest kind of country, and then you convert that to put into asset that pays you off at a higher kind of yield. Okay, so that's what we call carry trade, right? You basically borrow a cheaper interest, put in something that give you a higher yield to cover interest and eventually make up for the difference. Okay, so when the Bank of Japan eventually starts to consider hiking rates, okay, that would actually have an impact in positions that investors have in terms of a carry trade. Okay, that's where we may see some of these carry trades unwind, profit take, and things like this. Okay, so that move itself is definitely gonna create a huge volatility in the market, not only in terms of the yen, but as we mentioned, there are a lot of kind of like relationship from carry trades and other asset classes would naturally experience some kind of volatility when that actually happened. Okay, so just have that in mind, right? As we kind of continue to track what the Bank of Japan is likely going to do moving forward. It's not just a kind of like linear relationship where the yen is being impacted, but other asset classes in the financial market will have an impact as well. Okay, so that's what happened last week. If you take a look at this week here, the focus will be very much later part of the week. Okay, tomorrow we do have the RBA, but I don't think that's gonna be much of a volatility from that news. The focus will naturally be on Thursday and Friday. With Thursday we have the Bank of England. Okay, I don't think Bank of England is gonna stop hiking so soon. Okay, in terms of developed countries, the UK is actually still suffering from one of the highest inflation. Okay, and that means that the bank would unlikely stop hiking so soon. And therefore, from a fundamental perspective, we've been, kind of talking about this for some time already. We will see a policy divergence where the Bank of England continue to remain hawkish, whereas some other banks starts to shift from hawkish to potentially neutral or even dovish, right? And that will open up a very nice fundamental opportunity where you can be bullish on the pound, and then you just look for a relatively weaker currencies to sell it against, right? So that's on the Bank of England for Thursday, and then of course on Friday we have two major news coming in. One is of course the NFP, first Friday of the month, and then the other one is the Canadian labor market, right? So again, that opens up for some of the short-term news trading volatility kind of strategy. For those of you who are interested in it, okay, just a reminder, you can potentially catch on Friday. Okay, so that's a quick one in terms of like what are the events to take note of for this week. Okay, so with that said, we'll take a look at some of the charts over here and share with you some opportunities to take note of. Okay, so first one here to look at, of course, is the dollar index. Okay, so dollar index for this week, short term, I continue to remain a little bit bullish, right? So any kind of like a corrective pullback, a correction, we can see it as a potential short-term move back up towards like 50 and 618 area around 102.15 to 102.75. Okay, but that's basically about it, because once the market actually comes towards this territory, there's a good chance we'll continue to see a big, kind of like a bigger pullback or even a potential reversal back down. Okay, because that would then complete this potential move up, right? So short term, definitely, right? So you want to obviously wait for kind of like a corrective pullback here. Maybe going into NFP, that would be an opportunity to keep an eye on. Okay, so nothing overly complex. I think it's a very, very straightforward structure. If you get a correction, short term upside, right? That's about it. Now, if I go over to the euro dollar over here, okay, we are naturally then bearish on it. Okay, so from an Elliott Wave point of view, we obviously have this as a peak. This came down pretty impulsive. We have a temporary, very, very quick and short pullback. Following that, we have a very impulsive drop, breaking that low, right? So kind of put this into a potential WX and wave Y maybe developing in 3. Right? So as long as the market continue to just kind of consolidate and develop a correction over here and not break above that high, then any pullback, any correction will be seen as a sell trade opportunity with a target here, right? So this is a very simple 1, 2, 3 tree with expectation. Internally over here as well, tree with expectation. And that would then put price back to where the previous kind of like key areas are, right? So that will be the setup. That will be the opportunity for the week. Of course, understanding that we have NFP, likely the market is just going to be continuing to range a little bit more going into NFP, and then when the data comes out, that's where you can capitalize on the technical patterns, combine it with the NFP news release as a potential catalyst to trade the downside, right? Of course, you can utilize the sell stop, a breakout strategy to help you prevent in a way where if, let's say, the news came out and then euro dollar push higher, with a breakout technique of entry, you would then prevent, on jumping into unnecessary losses, okay? So that's on the euro side of things. For me, this week is naturally going to be bearish bias, and we're just going to wait for a corrective setup that we can look to execute our trade on. Okay, pound dollar here is a little bit of a kind of similar setup in a way. Okay, you can see this two chart here, quite the same. Okay, so over here, in terms of pound dollar, kind of same thing, right? I think not much of a diff. So you might want to potentially choose one, right? Because if you kind of trade both, then you need to be aware of its correlation. You may get exposed to dollar strength, right? Because you are selling both of this, then you're looking at dollar strength. You may be exposed to dollar strength in two positions, so you just factor that in, right? You either kind of reduce your position size on both trades if you're looking at both, or you kind of filter off and then pick one. Right? I mean, if you ask me from a fundamental point of view, selling the euro dollar maybe a little bit of a higher probability than selling the pound dollar, right? Simply because the fundamentals of pound is relatively stronger as of now. Okay, so this one here, target, quite simple as well. We're basically just looking at a three-wave structure, right? So 1, 2, 3, and then internally 1, 2, 3. Same as the euro. Okay, and in terms of targets, we're looking at 1.2650 to 1.2570, basically this area here, right? Nice confluence in terms of like previous low. Okay, so euro dollar pound dollar, to me is naturally going to be a potential trade for NFP itself. Okay, because we just need to wait for a correction setup, and the expectation over here is going to be slow, right? Because it's NFP week. The markets related to dollar is just going to consolidate until NFP itself. Then over here we have Aussie, right? So Aussie is kind of slightly different from the euro and the pound, right? We kind of have this little, very nice little rejection so far. And again, from a technical point of view, it has completed a 1, 2, 3 very nicely, okay, around the relationship of 100% Fips as well. So we're kind of anticipating at least a 3-wave pullback, right? We kind of got our first wave today, okay? So if I kind of update this, right, we are basically waiting for a pullback, okay? And if we can get that pullback, going into NFP, right? So we definitely have a couple of days, right? From now until Friday, we kind of have like 3 days or 4 days. If we can get this pullback here, then of course we'll be interested in that short-term bullish opportunity, right? We're taking this short-term buy, and of course when price hits here, there's a good chance this may continue to drop, right? Structurally, this can still develop, but short-term, if we can get a pullback, okay, not gonna be fast, basically a slow little pullback, then NFP would build up a very nice little uptrend. Okay? So this is where if you look into market correlation, okay, that's where you're gonna say, hey, but euro and pound dollar, we're looking at a sell, then how come Aussie dollar here, we're looking at a buy? Then it doesn't match, because if the dollar strengthens, then naturally major pairs will go down, right? If the dollar weakens, then major pair will go up. So how can euro and pound, we're looking at potential sell, and then Aussie dollar looking at potential buy? Now to me, I really don't care, because whenever I analyze a chart, right, I look at them independently, and the idea over here is when we're approaching a high impact news like NFP, we're always utilizing a breakout strategy, which means we look at buy stop or sell stop order to help us execute a trade, right? We're never going to use a limit. We're not going to use a market execution. Now, what a breakout and a stop order means is that price needs to move in the direction that we want, hit a certain level before the order gets executed, okay, and then we get into the trade. So in this case here, if I'm looking at selling the euro and the pound, then I'll put in a sell stop order, and if I'm looking to buy the Aussie over here, I'll put in a buy stop order. Now, when the news release, nearer to Friday, when putting in the order, when the news release and the market starts moving, now if the dollar strengthen post NFP when the data is released, then naturally, we will not get involved in the Aussie, but we'll then have maybe our trades trigger on the euro and the pound, and then we'll ride to the downside, right? And if let's say NFP data release and the dollar starts to weaken, then naturally we will not get involved in the euro and the pound, and then we'll get involved in maybe the Aussie dollar buy, right? So that's what I mean. I don't really care when both are kind of telling me different direction, because we never know, right? We never know what the data is going to be. We never know when the data release whether the dollar is going to strengthen or weaken. But the charts can help us by giving us a direction to focus. The charts can help us by giving us a setup that we can limit our downside. Okay, can give us the clarity in terms of where are we going to look for entry, etc. Right? And that's all we really need, right? And then we just ride on the volatility when the news comes out. Okay, so for me, Aussie dollar this week, that's the plan. If we can get a corrective pullback, then we'll naturally be looking for a short-term buy. Target somewhere around like 6,760 to 6,790, and then that's about it, right? For dollar Canadian, sadly, we didn't really get that little push. We came fairly close to it, just like shy of, I would say, 4 pips. Okay, my entry to sell was somewhere around 1.3265. I missed that a little bit, and the market seems to be reacting to the downside quite nicely right now. Right. So if I were to maybe update this a little bit, right? The direction is to sell. It's just that we sometimes don't get really perfect patterns. This may be the case when we kind of completed that three wave, okay, and naturally we'll be looking for sell side, right? So impulse correction, impulse, right? So the bias is naturally down, but of course understand that we have not only the NFP data coming in on Friday, we have also Canadian labor market. So I won't, even though I'm looking to sell here and kind of like the market didn't really tag it and starts to move, I wouldn't be jumping in just like that. Okay. Again, you don't want to be kind of like what we call FOMO, right? The fear of missing out, and then you just jump into the trade because you miss out on it, and it's moving, and then you get panic, and you just jump in, right? That's the worst thing to do. So my suggestion here is just let it play out. I mean, let it develop continually. And of course, if you kind of see a little bit of a correction here going into Friday, okay, then of course we have a setup, right? Because this is a mini pattern that we can recognize. This is a bigger pattern that we can recognize. We put in a sell stop, and if the news release and this breaks below it, then we have a very nice little trade to the downside. Okay. Now, how far can this go? Naturally, there are a couple of targets we can look into. Okay. The first target obviously is back at its previous low. Okay, so that will be a relatively short term target, right? I mean, if this is gonna just consolidate and then we just sell it here, then of course this is a short term target. The extended target would then be using this here as a fib guidance, targeting somewhere around 100%, which put us around like 1.2970, right? So you can have like TP1, TP2 kind of idea. Okay. So this one here, naturally the projection is wait for a corrective pullback, and then you can write on the volatility when the news release, potential downside. Okay. So again, very, very straightforward kind of like structure that is developing in some of these major pairs. Okay. Dollar yen actually did a strong push up post BOJ, right? So we kind of get that volatility. You can see here a couple of candles, spiking up and down, and then eventually it settles for a push back up. Right now the dollar yen is kind of testing the top of the channel. I'm neutral simply because this is definitely very fast and impulsive. Not gonna jump into the trade just like that. But if let's say we start to see some kind of consolidation over here in terms of a crawl structure going into NFP, then that would be a potential sell trade, right? So just need to wait till Friday and see if you can get a clear structure in terms of a crawl coming into this territory here. Then naturally that would be a very nice little sell opportunity to the downside, right? Okay. I mean, now it's too early. Again, you need to wait for a little bit while and see if we can get that kind of crawl, and then that will be a sell trade. Okay, so very nice little one, right? One move, and then of course internally that's the three move. Then you get another bigger one down, so that completes the bigger set of a 1, 2, 3 as well. Okay. So that's the plan. Just be patient because major pass. Just wait for the news to come out, then you ride onto that. Okay, gold is moving up very nicely right now. Something is missing there. Okay, I have a label there, means that there was one candle there. I'm not sure why this chart. What? Let me just very quickly double check. This is. Yeah, see, it's there. I think trading view earlier today. Yeah, I think this there is from FXCM, right? Yeah, so earlier today when I'm looking at some of these charts here, trading view did post up that there's some data feed issue with FXCM, all right? And basically this is what we're seeing, right? I mean, there's obviously a candle there, right? Okay, so just visualize it, all right? I mean, just want to show you it's there, okay? But because I'm using FXCM data, right? So we just stick to that. Just imagine, that's that data there, okay? That's that candle spike up. So basically, gold here we're looking at potentially 1, 2, 3. Okay, and 4 here may have completed, and we're likely looking at wave 5 up. Okay, so again, dollar related, so the idea is to wait for a corrective pullback first, right? So this is naturally a little bit of a V impulsive movement. Wait for a corrective pullback, that will give you a nice little buy trade to the upside. Okay. Yeah, so I mean the major pairs are not complex, right? They're basically quite straightforward. And I would say quite nicely built in for a correction to develop, given that we're building into NFP as well, right? And we're expecting the market to just be a little bit slow, and that's the phase where it's going to develop into a corrective structure. Okay, so that's on gold, quite straightforward. Crude oil is continue pushing higher. Initially we're looking at a breakout here for sell, but right now it's just pushing higher, so we're probably just gonna keep monitoring and see how it goes. I'm not too keen in buying it right now, simply because we are obviously seeing a divergence, right? And even if I want to buy, I'll always want to wait for a pullback first before buying it, right? So right now it's obviously a divergence, potential weakening of momentum to the upside. So you either be patient or you're interested in short-term sell, but right now we don't have that set up very nice. So my suggestion is wait for a push down first, wait for a pullback, then that would be a potential sell trade down, right? So until we get that, probably nothing is gonna happen. We just leave it as it is, right? S&P over here, short term we are looking at potential downside, but I'm just neutral because this structure is not the clearest. Okay, unless we can't get an impulsive drop and then a corrective pullback, then yes, short term will take one more move to downside and then long term upside. But until we get this, you don't want to be overly aggressive in trading this, right? So not the best, not the clearest structure of all. Therefore, the bias here is just neutral. Okay. Now, I also want to talk a little bit about Pound Australia. Okay, Pound Australia over here. Last Friday, I got involved in the trade. I kind of used the 100% level. The market continued to push higher, right? And then there are some traders who kind of also took this trade, and the market basically closed off the week here. Okay, really at the peak. Okay. And the idea is, why I want to bring this up is because one of the traders actually asked, what they should be doing about this trade. Should they, just cut the trade off before it hitting our invalidation level? Should you cut the trade early or just hold on to it and things like that, right? Now, my thought process and my approach is always, you don't cut your trade until it's proven invalidated, right? And the reason we put our stop, or invalidation level here is simply because as long as price haven't really break this level, the entire structure can still be valid, and that's the reason why we don't and that's the reason why we have our invalidation level there, right? Why we don't put our stop loss here, why we don't put our stop loss anywhere else, is really because the objective of your stop loss is to help you get out of a trade when the idea is no longer valid. Okay, so if your stop loss is here and the trade is basically still here, it basically means that it still has that probability of working out, right? So for me, I always don't like to be jumping into conclusions so fast, especially if all we see in the market is just one impulsive move, right? Now we may manage the trade in a way where if this can pull back correctively today, we'll look to get out maybe at break even or maybe a tiny bit of a loss. That is something I would do if we can't get a corrective pullback. Okay, because why? If you get a corrective pullback, then this suggests high probability upside, right? But at the end of Friday, we only get an impulsive move, right? And the market can basically do something like that, right? V shapes, right? So that's the part where my reply was just wait, right? We want to see today how the market is doing. If it's corrective, of course, then I'll be managing and getting out. But so happened today we can't see an impulsive drop, right? So that's something that's good, okay, because we are always anticipating some kind of reactive or kind of strong reversal around this area, and we're kind of getting it today, right? So this trade is working out not too bad right now, okay. So we're basically still holding on to the sell, and if I were to update this a bit, probably expect a little bit of a pullback soon, right? Especially after an impulsive drop. and we can expect more downside from here, right? So if we kind of update this a little bit, okay, the chart will probably now look something like this, okay, and we'll be looking at a target, okay, I mean target 1 if you're going to be a little bit more conservative, somewhere around there, right? So that will bring us towards maybe about 1.8795 or 1.88 itself, okay. And of course right now the invalidation will be somewhere there, but this trade, basically we have shift stops to break even with this kind of move, right? So if it pulls back a little bit deeper, so be it, we'll get our break even, look at another opportunity. If you're not in this trade, then of course you don't want to just jump in just because we get an impulsive move, right? So again, wait for the pullback. That will be a setup to go in, right? Yeah, so that's the idea of it. Okay, Bitcoin, nothing much over here. Just be patient, right? Again, the crypto market has been in a consolidation for a good 2 months. I would say this is early July or end of July. This is somewhere late June, right? So this has been happening about close to 2 months. Just be patient, right? Trading around this kind of environment is just going to be tough as well. Okay? So nothing much on BTC. Just be patient on that. Right? So I think this week here, a lot of potential setups are going to come from the major pairs, which is dollar related. Okay, and of course, the actual activity, the kind of time to really focus on all these trades here. I think majority of them are going to be closer towards Friday, right, when the NFP data is released. Okay, so that's the overall plan and opportunities for the week. Okay, good. Yeah, so far any questions from you guys? Let's see. Hey, yeah, I think any questions? All good. Okay. Okay, so far so good, yeah. Okay, I see question here. We have a couple of them. Okay, Arthur is asking euro dollar and gold will have different directional bias. Yeah, for me here, euro dollar primarily is on the downside, and then gold here primarily will be outside. Right? I mean, gold right now is also moving. Okay. Yeah, but gold here, I'm looking at a corrective pullback. We're definitely looking at the upside, and euro dollar over here, we're looking at corrective pullback, and then we'll look for a sell. Right. So yep. Okay, these two pairs of this week here, the direction that I'm focusing is opposite, right? It's different. Okay, another question I see here is from Chia, asking about the Hong Kong and China market, right? Okay, let me update this, right? I only look at this chart whenever you ask of it, right? Because I really don't look into this two index, okay? But let's just very quickly see the relationship of these two moves. Yeah, I come to the 1 2 7. Okay. So this one here, what I'll be looking at is 850, right? So this is basically China index. Okay. You want to be okay. So this is definitely a very strong little rejection, right? So it's a mini V, right? So this has also potentially completed this here 1 2 3, okay, and therefore we kind of expect a deeper pullback potentially towards the 50 and 618, maybe then only another move back up, right? So at least for this week here, there's a good chance of this pullback happening. Okay, so something like that in 3. Okay, we always anticipate a simple structure of 3-wave move, right? So look out for areas around like 12900 to 12750. Okay, that will be the area of interest to keep an eye on. Okay, for of course potential buy opportunity depending on how price is coming down, or if you're interested in short-term sell, right, then of course you'll be simply waiting for a little bit more downside, then a corrective pullback, then that will be a sell opportunity, right, short term. Okay. And then in terms of HSI, okay, so HSI, I think overall structure maintains the same, right? If you take this away, it's still basically within the channel, right? So if I put in another update of a label over here, okay, that will be potentially a three-wave move. Let me update the degree a little bit. Okay. So for HSI, okay, my suggestion is you want to maintain a little bit of a neutral to potentially a reversal trade idea. Okay. So if you take a look at this big channel, right? So we are kind of around that zone in terms of equal leg, and of course we also have the channel top. Okay, so what you want to look out for, I think between A50 and Hang Seng, A50 may be a little bit of a clearer opportunity to sell if we can get a crawl pattern over here. Okay, and if you can't get a crawl pattern, of course you look for the breakout to the downside. That will be a sell trade, right? Yeah, this to me is a little bit cleaner than A50. A50 we're also potentially looking at that downside, but this may need a little bit while to develop, right? In terms of a little bit drop and then a corrective pullback, it may take more time. As compared to HSI, basically you just need to wait for a cross structure develop, and this can turn in, I mean, this development can be completed maybe around like 2 to 3 days. So around Wednesday, Thursday period, if you come back, you can see a crawl. That would be a very nice little setup to look for sell. Alright, so that's on Hang Seng. Okay, some of you are asking potentially in terms of like the yen pairs. I think generally the yen pairs they're more or less the same, right? In terms of dollar yen, okay, we're looking at something like that. So if you're looking at maybe, you know, pound yen and things like that, you basically just maintain a neutral point of view, right? Especially after a very strong little impulse. You don't want to be trading it now, okay? Because if the market backs down, then we'll see if we can get a correction. Then of course we'll be looking for sell side. If the market pulls back correctively, then we'll be looking at upside, right? But right now it's just too early to really talk about it because we don't really have much data in terms of what's the development next, right? So you can see neutral. Okay. If you take a look like Aussie, you know, it's basically also neutral. You take a look at Kiwi, it's also going to be neutral, simply because we just have this very strong little push. Not enough data points in terms of the pattern development to really tell us which direction has a higher probability. Okay, so we're just going to be not moving. Okay, we're just going to be patient and wait for a market to develop further. Okay. Yeah. So what push the yen pairs are basically the Bank of Japan from last week, right? So that creates that volatility, and across board, all the yen are doing a little bit of a weakness right now. Okay. I mean, the best to focus is probably dollar yen as we cover, right? Kind of get a little bit of a crawl, then you have the NFP that you can ride on this week on Friday. Okay. So the yen pairs, except for dollar yen, the rest of it you probably just stay out of it. Okay, just give it more time. Okay, I think the closest that may develop into something is basically dollar yen, and then you ride it with NFP. So the driver is not the yen. The driver is going to be the dollar itself. Okay, huh? Okay, franc pairs. Okay, pound franc, I think it's a very clear structure. Essentially what you're looking at is this is a flag. Okay, so it's basically a correction. It has completed three-wave here as well. Okay, very nice. Towards 100% is doing a little bit of rejection. So this one, straightforward. Okay, we'll be expecting downside over here. Okay, so look for sell, right? Look for sell. How far this can go, if I'm gonna take it from the very top here to start labeling and looking at the overall structure, I'll put that as 1, 2, this is 3, 4 has done, and right now we're developing 5. Okay, so a very quick projection of a 5th wave here. One way we look at it is we take the wave 4 and then we just do a simple 127 extension, so of course the target won't be so big. Okay, conservative target will be somewhere around there, right? So 1.1015. The other way we can always do things is to just basically measure the magnitude and movement of wave 1, kind of duplicate that, quite close, right? So we're just gonna stick to like this projection. Okay, yeah, so that's the outlook of Hong Franc. Okay, okay, global indices. Nikkei over here, yeah, basically is doing as what we're looking at so far since the last time we did it. So Nikkei is currently coming towards this territory. Okay, so quite similar to the dollar yen structure, right? So we're in this territory again. Ideally, you want to see a little bit of a cross structure. Then we'll be looking at a potential downside. Okay, now I'm not too keen in buying it here unless we get a very impulsive break above and a correction. Then yes, we'll look for upside. But until that, there's a high probability of this move, right? Simply because this is corrective in nature. Okay, so yeah, look for a crawl. Maybe you might get that in the lower time frame. Okay, again, you might need to wait a bit, right? The market right now, obviously in Japan, is closed. What you want to see is something like that. Okay, and you can't get a structure low that would form a potential breakout entry for you, and you get an impulsive break below, that would be a sell stop. Okay, yeah, so that's on Nikkei, right? I think definitely downside, and then your target would just be at the bottom of this channel. I mean, if you just put in a very simple fit, is somewhere, I mean, right now it's not there yet, right? But we're just gonna take like rough estimation that will put you around like 31,500 area. Okay, so that will be Nikkei. Okay, last one here I see is Cat Franc. Yeah, so Cat Franc over here, this is naturally looking corrective in nature. So we may get a little bit more upside. Okay, again, you know, it doesn't necessarily need to always hit the 100%, right? It's just rough estimation, but we're kind of very close to it, right? So my suggestion here is definitely, I mean, quite obvious. This is primarily right now a 3-wave corrective structure. There's no reason to be buying it. Okay, so what you can do, of course, you can go down to the lower time frame. You know, maybe give it another day. By tomorrow, if you can't get something like that, again, use the breakout for potential sell. Okay, so Cat Franc here, we do have the Canadian data on Friday, right? So you can potentially leverage on that to get involved in the trade as well, which means, you know, if you continue to see a continuation of a crawl structure here, that would be ideal for a breakout to the downside. Okay, yeah, so higher time frame, you may want to be a little bit more conservative and maybe just target around this area, right? So look for sell around this zone and then a TP just at the bottom, right? Because we can't have like this structure here that hasn't been really broken yet. So you don't want to anticipate a break yet, right? You just want to take targets and then look for next trade after that, right? So yeah, that's on Cat Franc, right? So you can see, doesn't really matter what instrument we're looking at. You know, can be commodities, can be index, can be FX, right? At the end of the day, when you're looking at technical analysis, the principles are more or less the same. Okay, we're basically looking at the most simple pattern first as a 3-wave, and then of course, you know, some patterns are a little bit more complex, but we always stick to the simplest form first, right? That will always form our primary view. Okay, great. Okay, so that's all from me for today, I think. Okay, I think we're gonna update you guys a little bit in terms of the details of our webinar in August. There are two webinars that we've designed in August, we've prepared in August, right? I'll give you a date first, right? But in terms of like the registration link and such, it's not up yet. But once it's up, again, maybe next week we'll update you guys. But in August, we're looking at we'll be running an event, a webinar, right? So online, doesn't matter where you're based at. August we'll be running online. We have one online webinar on the 17th of August. I'll be sharing with you a little bit more into like EA and PAM, right? So for those of you who are not familiar with EA, not familiar with what PAM system is, the webinar is designed for that. Okay, and then another one that we have is an offline. Now I won't be speaking in that event, but I'll be there. Okay, there will be other speakers for that event. That event is actually organized by Everything Trading. Okay, that event is an offline, right? So it's in KL and PJ in Malaysia. So that's happening on the 13th of August. It's a Sunday. Okay, it's kind of like a full day event. There are 3 speakers lined up for it. If you're interested in that, reach out to Everything Trading team. Okay, so again, if you're watching now on Zoom, you probably have the WhatsApp support team already. If you're watching it on my YouTube stream, okay, you can actually go over to the kind of like description box below. There's a link to a WhatsApp. Okay, you can actually reach out, click that link, it'll bring into WhatsApp. Just text over and say that, oh, you're interested in this offline event, and you like find a little bit more details, you like RSVP, you can do so there. Okay, if you're watching now on Trading Live, yeah, sadly I won't be able to drop that link over there, but you know, if you're keen, you can always just find ways to connect with me on social media. I'm sure you can do that, and then from there you'll be able to get the link. Good. Okay, so yeah, that's all from me for today. Okay, so all the best to your trading for this week. Okay, and see you guys in the next one. Yeah, so see you guys. Bye bye.